We're seeing the government coming to the market now with a 15 billion shilling issue. Any surprises just in terms of the size before we talk perhaps about the pricing?
Pardon? Just 1 moment.
Just the size of the issue that the government is looking at. We're looking at a 15 billion bond sale by the government. Is that a size that you expected this time round?
I think 15 billion is not a large amount. I mean, considering the oversubscriptions we've seen with the last 5 or 6 bond issues, 15 billion is it's easily done.
What about the pricing around that issue? What are you expecting?
Okay. They're issuing a 2-year and a 15-year paper. With the 2-year, that's staying with tradition, because CBK has always issued a 2-year paper in December. But the 15-year is something new. Actually, most of the market was not too keen on them issuing such a long paper because of what we've been seeing with REITs over the last 6 months, where they've been rising up marginally. So with the 15-year paper, we're looking at levels of between 9.5 to about 10.5. With the 2-year, we're looking at levels of about 4%, between 4 and 4.75%. They issued a 2-year about 3 months ago, which came in at levels of about 4.7. So we expect it around more or less the same levels.
Yeah, but what does the fact that the market does not seem too keen on the 15-year issue mean? Are we looking here at a case where perhaps the market is saying the pricing around these bonds is not quite what it is looking at, particularly given the long-term nature of the bond issue itself?
That's true, because basically what's been happening is the government has been issuing benchmark bonds over the last 3 months. They did a 2-year, a 5-year, and a 10-year paper. And with all the primary issues they've done, the rates have come in at above market. So with a 15-year paper, which has longer duration, a rise in interest rates will leave a lot of people underwater with who are currently holding 15-year papers. Because currently the market yield for a 15-year paper is about levels of between, let's say, 7 to 8%. But with this coming in at 9.5 to 10.5, that leaves a lot of people in the red.
Yeah, but Kenneth, when you look at the inflation outlook, I mean, we're looking at inflation at 3.84%. Perhaps one can sort of see why the government is keen to try to lock up rates at the current levels.
Actually, with the inflation, I think in the short term, fine, we do expect an increase. Actually, even with December, we do expect a slight increase as we move into the festive season. And mostly, I think also oil prices had a lot to do with the rise in inflation, because we saw transport costs go up and food costs also rise. But on the long term, we expect inflation maybe to stabilize around levels of 3.5%. So, and also with what CBK has been pushing for the last, I think, 1.5 years to 2 to 1.5 years, has been a low interest rate environment. But they actually look like they're doing opposite of what they've been trying by allowing in bids above market. So basically pushing up the yields.
Yeah. Let's talk about corporate bonds. Now, Safaricom's bond is still open for bidding with the second tranche for 4.5 billion shillings and a fixed rate of around 7.75%. How has been take-up around that one?
I think it's open for about 2 weeks. 4.5 billion is a very small amount. There is quite a bit of interest because it's a 5-year paper with a fixed interest rate of 7.75%. That is about 125 basis points above market. And Safaricom is quite a stable company, so there is quite a bit of interest, and we expect it to be oversubscribed. It's the second tranche, so we might actually see them exercise a green shoe option. They haven't given us any information on this. But going by the way the other corporate bonds this year have performed, Kenyan and the last HFCK bond, all of which have been oversubscribed, we also expect this to perform quite well.
Yeah. Lastly, let's look at that MPC decision last week to keep rates unchanged. Was that a surprise for you?
No, not really, because considering the way the rates have been moving, and also what MPC has been trying to do is push down commercial lending rates. So it seems by the effects of moving it to the CBR rate to 6% have actually started to trickle down into the market. We've seen lending rates over the last 6 months come down from levels of about 14.3% to current average levels of about 13.8. So and credit has actually grown, and commercial lending rates have declined. So we expected it to stay the same to let the effects move more into the market.